Hello, ladies and gentlemen. If I could have you back in the hall for us to start the second session. We have a wonderful conversation ahead of us. Please take your seats and bring your chai along. Please bring your cup of tea. Just like Naz is doing that. Great. That's the way to go. So we have a wonderful conversation coming up, and I'll be requesting Maheen to join us back on stage with Laith Al-Falaki, and you've already been introduced to both of them, so I'm going to quote verbatim from a website. If I could have everyone seated for us to begin the second session, a delightfully interesting one. I was just talking to Laith and I was telling him how out of depth I felt when I started reading up on infrastructure financing, and how fascinated I am. The more I know, the deeper I feel for this, and I feel it is a perfect solution to the problems that face us today. And we have the expertise right here in this room, whether in the context of conceptualization or implementation. If I could have everybody taking their seats. Thank you, Faisal. So we have this delightful conversation coming up with Maheen Rahman and Laith Al-Falaki. I'll request both the guests to join us back on stage. You've been introduced to both of them, so I'll skip the introduction and I'll dive deep into a quotation that I confess I copy-pasted from the website, but it looked so beautiful. We transform economies and improve lives. I'm loving the connection of work with quality of life, the way it is being cemented through and through. Through the application of a theory of change, we mobilize private sector funding, leveraging public sector funding, and blending it with private sector investment for local, regional, and international sources, and debt or equity from development finance institutions, or DFIs as we know them, to achieve greater impact and to change lives. PIDG's tagline also is changing lives, and I absolutely love that. I think Maheen said in one of the earlier sessions that profit without purpose. Am I right, Maheen? Yes? So the companies will no longer be able to have profit without a purpose. And here this conversation is actually illustrating this very paradigm, that work will have to have a purpose and the profit will be by default if it is good work. So the tagline for PIDG is also pioneering infrastructure and changing lives. And if you could just go through the list of outcomes that they have on that chart on the website, you will be as convinced as I am, if not more. So the conversation is going to focus on lessons from the PIDG experience on blended finance. How can Pakistan progress on this route will form the core of this conversation, and Maheen will engage our guest and our speaker, Laith Al-Falaki, over the questions and the queries and possible solutions. So over to you, Maheen. Thank you.
Thank you very much. So I'm very pleased to be moderating a one-on-one session with Laith right now, because I think there were a lot of concepts discussed in the sort of inaugural session that, in my mind, and perhaps in the minds of many here, probably raise more questions than answers. So it's one thing to talk about having capital to deploy. It's always easy to say we have the equity, we have the debt, we have the guarantee frameworks, etc. But the reality is to put these concepts into practice requires a lot of sort of heavy structuring and a lot of comfort that needs to be given to the private sector to bring that capital in. Today, at 20% interest rates, it's easier to go buy a 6-month treasury bill than to talk about building a road or building a dam or building an irrigation system. So how do we do it in this environment where today Pakistan is sort of staring down the barrel of another IMF program with its very heavy conditionalities, and given that things are only going to get worse from here, what can we really expect from the private sector, and are there other countries in the world that we can possibly learn from? So I'm glad that Laith is here to discuss some of this with me. But perhaps, Laith, we can start by talking a little bit about PIDG. It's an institution which is over 2 decades old, and it has a mandate to build infrastructure on commercial terms in frontier markets and use local markets to finance rather than international markets. So how would you describe PIDG to our audience, and what is PIDG's core mandate, and what has been the impact so far that PIDG has managed to create in other countries?
Thanks, Raheen. Thank you, Raheen. Can you hear me?
Yes.
Well, actually, we have a video which tells you a bit about PIDG, because we've just celebrated our 20th anniversary, so maybe we'll put that on in a moment. But firstly, I mean, we look at ourselves as a catalyst. We don't look at ourselves as someone who has all the solutions, but someone who can help crowd in the private sector. And you talk about structuring, and that, of course, is really important because we have to give that comfort to the private sector. But I think where the journey starts is the risk appetite, because these private institutions, they don't have the risk appetite. They have all the structuring in the world. If you gave them this project and you said structure it, they would do so. They would do so in a way that made it mitigated the principal risks and reduced the risk of loss. That's what they do in their day jobs. But what they don't have is a mandate to enter into these markets, and I think that is the role that we can play. I mean, before I became CEO of GuarantCo, I was the CRO at PIDG, and I'll recite to you actually an interesting story of one of my very first days at PIDG. I was meeting the owners, as we call them, or our donor entities, and I was going to go through with them my plan and my thoughts on risk appetite. And the day before I was meeting Andy Bainbridge, who's our chair, and he hopefully will be able to join us some point later today. And we sat down, and I went through it with him, and he said, "So let me get this straight. In very simplistic terms, you're saying we need to be more active in areas where there is less risk." And I've been in financial services at that point for about 23 years. That was my mindset. So I said, well, of course, in very simplistic terms, that's what we need to look at. And he said, no. That is not what this organization is about. We need to be at the frontier. we need to be where there is need. And where there is need, there is more risk. So actually, over the last in my first few years at PIDG, we developed a risk appetite, which obviously focused on risk, but also focused on need. And that is really vital. And I think by focusing on need, we have been able to then enter into those markets and do the sort of deals that we believe are well structured, that when the private sector comes in, they can see they're well structured. Of course, they need a nudge. You know, we do 100% guarantee day one. We certainly shouldn't be getting out then because they're not going to follow us. Then by the 5th transaction in country, hopefully they're getting a bit more comfortable. They may be able to take a bit more naked risk. And you can see actually that ethos of PIDG actually coming through in the numbers, because over 50% of the transactions that we have done over a 20-year period, so over 100 of our transactions have been in what we call FCAS countries, or fragile and conflict-affected states. And over 50% have been in DAC 1 and 2 countries on the ODA scale, so some of the lowest income countries. So, you know, we've walked the talk, and I think that's what sets us apart, because we then start with that risk appetite, and that allows us then to crowd in the private sector further down the line.
Great, thank you. And I think you
Shall I put the video on, Maheen?
In a minute,
Okay.
We'll come to the video. Yeah. But if we have to talk about practical examples, what would you identify over the last, say, 20 years or so, or the transactions that stand out in your mind that have made a clear difference in the countries? So when we talk about impact and we measure it, we say, okay, PIDG has actually mobilized almost $40 billion of private sector capital into projects, has worked across 40 plus countries in Southeast Asia, South Asia, and Africa, has impacted over 220 million people in terms of improved access to infrastructure, and at the same time has created almost 250,000 to 300,000 jobs directly in the markets themselves. So obviously the impact element is there. But out of all of that, what stands out for you as being your key success stories, if you could pick one or two transactions that you think really changed the game?
Picking one or two is a bit of a challenge, so maybe I'll go for 3 or 4 if you'll permit me. When I first joined PIDG, actually, as all prospective employees do, they look at the websites, right, and they look and study. And what really stood out for me at that time was a project that was just coming on stream at the time, which was in Rwanda. And it was a water project that was going to be providing 500,000 people with access to clean, drinkable water, potable water, who hadn't had it before. That was really inspirational to me. And when I came on board, I thought, my God, you know, because I'd heard all these stories about how difficult water was, how no one could do water projects, etc. And here was an entity that was breaking new ground. Of course, when I got in the door, I realized just how difficult water was, actually, and how difficult it still is. But I think that is a beacon project that we need to look to see if we can replicate in other countries. And of course, I realize that water is a political football in a lot of countries, but I think that's where it all starts. And in fact, that takes me probably to the next project. When I was in Zambia, I was on a visit there, and I visited a project that InfraCo Africa had put equity into. And I sat down under a tree with the head man and the head woman of the village. And they said to me, we only need 2 things. We need land, we have land, and we need water. And you're bringing the water through irrigation. That allowed them to grow their crops. It allowed them to take those crops to market, the market gardens. That then generated economic activity. That was able to then send their kids to school, access to electricity, and all this came through water. So I'm really passionate about water. I think you're getting that, and I think it's something we need to do more of. Sadly, it is proving very difficult. And then looking at GuarantCo itself, I think one of the things that we do differently is that we mobilize capital markets. And I think that is really fundamental. And I take great pride in, obviously, you are you should take the most pride in Infrazamin, but I think the idea of credit enhancement facilities, local credit enhancement facilities, and being able to crowd in pension funds, institutional money, is absolutely vital. And so when I look at what we've done in Nigeria, I think we can replicate. And that started small. It took a long time. I think you're actually ahead of the curve in terms of doing the first transaction. You've managed to do it within the first year. I think it took Infra Credit Nigeria a couple of years before they did a single transaction, and their portfolio built up very slowly. But as you mentioned in your opening remarks, they're now going great guns, and they're doing these really big bond transactions in country with the economic zone there. So I think we could, and they've also been able to attract significantly more equity as well, as people have seen the entity develop. And I hope that happens for Infrazamin as well. And I think that crowding in that local element is absolutely vital. I take great pride in that. And then more recently, you mentioned Axis Bank in India. I think that is a great opportunity for us. We had this idea that actually, why talk about individual projects? Why not be programmatic? And let's see who we can partner with on these sort of programmatic ventures. And EV is absolutely vital. It's vital across the world. It's as vital in emerging economies as it is in developed economies. And I think if we can do something similar, and it doesn't necessarily have to be EV, it can be a climate resilience, it can be climate mitigation, it can be any of these key thematic pieces that we want. And let's find strategic partners that we can team up with and then do really quick executable transactions using local knowledge on the ground. And I think that's what we've done with Axis, and we hope to roll that out across other countries in which we're active.
Great, thank you. And those are sizable transactions. So Axis Bank was $200 million, all using local currency to finance EV projects. And similarly for the economic zone that he's talking about in Nigeria, that was $150 million with debt all raised locally from the local markets against a 20-year bond. Now, you know, we're all familiar with the way our capital markets work here, and right now it's hard to place anything over 6 months to a year. But here we have other countries managing to pull off 20-year debt in those markets. And I think that's where we eventually have to try and think about how to transition to as well. So we do have a short video around PIDG, and then we'll talk a little bit more about what PIDG's plans for Pakistan specifically are as well. So are we playing something?
We are the Private Infrastructure Development Group. For 20 years, we've mobilized private sector investment to deliver infrastructure projects in regions where investment doesn't otherwise flow and where the infrastructure gap is the greatest. Access to infrastructure like energy, water, communication, and transport shapes how people live and what opportunities they have. It determines the future of societies and of our planet. As an impact investor, our work supports the growth of sustainable and inclusive economies in the most challenging markets.
We are bringing infrastructure solutions to those who need them most, with an inspiring list of first-of-its-kind projects from renewable energy to local capital markets.
We invest in Africa and South and Southeast Asia, delivering projects in the most fragile and economically disadvantaged regions, where we've seen firsthand the transformative impact that infrastructure can have in reducing poverty. Our projects have provided necessities like water, energy, housing, and communications to over 220 million people, directly created 250,000 local jobs, and supported many more indirectly. Our investments make a real difference to people, We map our contribution to the Sustainable Development Goals and drive high standards in health and safety and environmental and social performance.
We are an active investor with impact at the core of what we do, and we deliberately incorporate climate and gender lens in all our investments.
In our first 20 years, PIDG has seen 190 infrastructure projects reach financial close, which have mobilized $37.6 billion and contributed to building sustainable economies, transforming markets, empowering underserved communities, and supporting livelihoods. We have consistently delivered groundbreaking investments, like the first large-scale renewable projects funded by the private sector, or the first green bonds in several countries. PIDG's mission is even more relevant today as the world recovers from an unprecedented pandemic and as we face the urgent climate emergency.
We are investing in the regions with the lowest historic greenhouse gas emissions, the regions that are the most vulnerable to climate change, and also the regions with the youngest and fastest growing populations in the world.
The climate crisis is the biggest threat the world has faced, and we need urgent action now. PIDG will continue to deliver the inclusive infrastructure needed to build a sustainable future, working with businesses, investors, and communities to adapt to climate change and deliver positive impact at scale.
Great. So, Pakistan. PIDG has been working here, I think, for the last 7 or 8 years.
Correct.
But what brings you here today, given the juncture that we are at? And what are your plans on how you would like to be deeper involved in the country?
That's a great question, Maheen. Of course, everyone is now looking at Pakistan and saying, you know, what's happening with the IMF? There are all these other big problems. We've talked about the floods, etc. And people are expecting people to retrench from Pakistan, and that's not who we are. I mean, if you look at, go back to the story I was telling about being where we're needed, we believe that we are really needed here. And now we have a foothold in the country with Infazami. I think Zafar there played a key role in getting us in doing our first transactions in Pakistan. There is, the need is greater than ever, and I see a huge need in climate resilience. I see a huge need in developing capital markets. We have to find a way of getting investment in through the capital markets. I think that is key. And what we believe that our expertise that we've demonstrated elsewhere through trying to attract maybe impact investors, social investors into some of our bond issuances can work just as well in Pakistan. And maybe that helps get the ball running. So if we can do some green bonds or we can do some social bonds, then we'll look to do that. I mean, clearly we have to go beyond just climate mitigation, but climate resilience is absolutely fundamental here as well. And I think getting capital market investment is going to be key to that.
And you've just opened the door to my next question, which was related to bonds. So how do we convince, and we've got asset managers here, we've got bank treasuries here, how would you go about convincing a private sector investor like a pension fund, very risk averse, how would you convince them to put their money into a 15-year infrastructure bond?
I'm not saying it's easy, of course not. And I think that the key is proof of concept. So normally when we do a bond transaction, we'll work with those investors and we will typically guarantee 100% of that bond.
So 100% of the credit risk you're willing to take of the project?
We will take that, and that actually allows those investors to actually see the project, understand the project, understand GuarantCo and what makes us comfortable and the credit lenses that we look through. And further down the line, we hope that we will do second bond, third bond, and we will reduce the guarantee amount that we need to put in. We realised that people who are guarding pension fund money want to do so safely. They're not just going to take, risks that are going to put that money, in jeopardy. But we, I think, have seen this proof of concept work elsewhere. I mean, even just your neighbours in Bangladesh, we did a bond there for an agri-processing capex project, where we got one of the biggest insurers involved, and we did 100% guarantee. We're now talking about doing a second bond there in Bangladesh with that same entity, with the same investor, but with them taking 75% risk. In between times, they've also taken naked risk for the very first time on another project. So once they see your processes and they understand that those risks can be mitigated, you can get them in on the journey. It goes back to my initial point of it starts with risk appetite. Their risk appetite is always low at the start. If you can widen that, you can then demonstrate that within that risk appetite, they can invest safely.
And I think that's the key point, right? So how do you wrap the instrument? So the instrument is now actually rated AAA. And in the context of GuarantCo, their rating is actually higher than our own sovereign rating. So our sovereign rating is C AAA, but GuarantCo's rating is, I think, AA by Moody's.
AA minus by Fitch and A1, which is the equivalent of A plus by Moody's. Yeah.
Right, so you're actually rated higher than the sovereign. So when you come in and guarantee a bond, then all of a sudden you've eliminated a significant portion of credit risk just off the table for the investor. So that's a very powerful tool to have. How do you see that in the context of the Pakistan capital markets, where yes, the credit risk is addressed, but what about the long-term aspect of bringing infrastructure bonds? Do you think that it takes time to build up from 5 years to 10 years to a 20-year appetite? Or is this something that can be done in one go, given that the credit risk is really not a problem in this situation?
Yeah, I think doing it in one go is probably a leap too far for investors, even because they also want to manage their liquidity. So, beyond a 5-year time horizon, they will also be taking a view, actually, our liquidity is tied up. Who knows what's going on with interest rates, or who knows what's going on with other investment opportunities. So typically they want to be at the sort of lower end of the maturity curve. And you have to move them up slowly. Now, if we can develop a capital market where there is secondary liquidity and there are refinancing opportunities, then they are more likely to be able to take longer tenors. And that's really what we want to be able to do. And I mean, going back to one of our projects that we've done in Kenya, we did a green bond for student housing. GuarantCo provided a 50% guarantee for that. And one of the anchor investors was Emerging Africa Infrastructure Funds, one of our sister companies. That project would never have got going, or the bond would not have been fully subscribed without having that anchor investment. Now, following that anchor investment, they did another bond where they didn't need EAIF. EAIF is now getting approached by other investors in the market to buy their holding. So that is going to demonstrate secondary liquidity. If they're able to then sell that, then that gets other investors comfortable, even more comfortable. Actually, look, there is actually trading in this instrument, and we can trade at par. It's not about taking haircuts or whatever the traditional bond pricing model is. Mm-hmm. So I think all those things together can really help push out tenors. We also think, I mean, maybe not so relevant in the bond markets, maybe more in the loan markets, but this liquidity extension guarantee that we are offering is something that really gets people excited, because people are very worried, financial institutions are very worried about ALM, And they should be. I mean, we've just seen what's happened with Silicon Valley Bank, right? And that's a clear, and the contagion that may bring, which is another crisis. Yeah, they seem to have crises on top of crises these days. But that's an ALM, potential ALM failing. So actually, if we take that out of the equation and we say, you manage your asset liability mismatch, but this project actually needs long-term financing. It doesn't need 5-year financing with a big refinancing risk. We will take that risk off your hands. They're much more comfortable taking the credit risk then.
Sure, and honestly, it sounds, when I listen to you, it almost sounds too good to be true, because you are taking a significant risk off investor tables, and you're saying, I have the capacity to absorb it. So I think the question to ask is, how do you absorb that? Because obviously, you're working at the margin of what is considered high quality credit. So as guarantees are meant to do, sometimes guarantees get called and sometimes guarantees don't get called. But what has been GuarantCo's track record in paying out guarantees so that the market has comfort that regardless of the fact that I am invested in a long-term instrument, what are the chances when there's a credit event and I cannot get my money back? And I think in Pakistan we've seen that in 2008, where we've seen AA, AAA instruments end up in default situations. How do you, how has your track record been over there, and how have the payouts been to investors in those situations?
Okay, so I mean, you raise a really important point, Maheen, and the proof of the pudding is always in the eating. Okay, you can say this is a guarantee that is available on demand, that it's not like an insurance instrument where you have all these sort of payout protocols, etc., and these operational risks. It's an on-demand instrument. And you can say that, and then it gets called and you don't pay out, then suddenly your whole business falls apart, right? So although we never want a guarantee to be called, in some ways it is good when it is, because it actually demonstrates to the market that we do pay out. Sadly, for my own peace of mind, we've paid out a bit too much in the recent past. We've had a couple of large calls on projects for various reasons, and those haven't always necessarily just been credit events. There have been some engineering issues which you get, operational risks on projects which have meant cost overruns, etc. So we have paid out quite a bit. One thing I would say is, though, that we are patient capital. So though we pay out, we then step into the shoes of the lenders and we play an active role in managing the asset and restructuring the asset. So actually our actual loss and write-off history is relatively low, even though maybe our provisioning has been quite high and our payouts have been quite high. But there are, just to give you a success story, in the very recent past, we paid out and were repaid within the same year, last year, on a guarantee that we had out in Mali, which was a power project where we were actually providing a guarantee for the DSRA. So we paid out, we stepped into the shoes of the lenders, and we were repaid within a matter of months.
Oh, wow. So I think the trick really comes down to the fact that GuarantCo and PIDG companies, they actually like to get into the depth of the project itself. So it's not similar to bank lending. It has overlaps, but the reality is that the way they look at the project cash flows, the way they analyze how the project will come together, that is what gives GuarantCo as well as Infrazamin comfort that the projects are indeed financially viable. And I think in terms of security package, while the ask is similar to the banking sector, there is no requirement to over-collateralize a project, which I think is quite critical, because sometimes that collateral may not just be available. So if we can find ways to work with project viability, commercial feasibilities, I think that's where we have the greatest success in bringing more projects to financial close. So I think we're almost at the end here, Laith, but I'd like to just ask you a final question regarding Pakistan. We are incredibly climate vulnerable. We have seen the damage that the floods have caused us. How do you see Pakistan as a whole going forward in a situation where we don't know whether today it's a flood, tomorrow it could be a drought, third it could be something else? How do countries or emerging markets such as ourselves buffer against these changes that we are seeing? And we are not responsible for them because we are not the carbon emitters. But how do you think that battle can be won, at least locally?
I mean, I really wish I had the answer to that, and greater minds than mine have been, on that topic for some time. And one thing I would say, firstly, I would echo exactly what you're saying. I mean, Pakistan, as Jo, I think, mentioned in her speech earlier, is the 8th most vulnerable country to climate across the whole globe. And if you look at some of the other markets we're in, I mean, Africa as a whole, I think, only emits about 3% of global emissions. And most of that is South Africa, Nigeria, maybe Egypt. Everything else is pretty much negligible. And yet they're the most susceptible to climate change. We've seen the similar floods and cyclones in Mozambique and Malawi as well. And I think we need to really galvanize the international community around this. And when we talk about development and we talk about climate, we shouldn't talk about them separately. We need to talk about them together because they go hand in glove. Climate resilience is development. And, I talked about it in a very small way with what's happened with K Electric. And with the monsoon and the illegal connections, and luckily we had 0 deaths last year. That's what we really want. We talk about changing lives. That's our strap line, is pioneering infrastructure, changing lives. But we need to save lives, okay? And that's the lifeblood of the economy. The detriment to a country like Pakistan of the floods is obviously the great tragedy of the loss of human life and the loss of the displacement and the loss of somewhere to live. But actually the impact on the economy knocks on for generations and has those impacts. So we need to stop thinking about development and climate as two separate things and start thinking about them as going hand in glove. And I think when we start doing that, actually, we'll start talking the same language that donors are talking and the same language that impact investors are having. And I think you will see greater capital flows into the country.
Great, thank you. And thank you for a very enlightening session. Any final words of advice for Pakistan, given where we stand today?
Maybe just 2 words, or 3 words. Don't lose hope. I think Pakistan has great potential. We talked, I think it was mentioned that potential can be a sad word, but actually it can be an empowering word as well, because if you know your physics, you know that energy isn't created or it goes away, but it transforms from one thing to another. So let's transform the potential energy into kinetic energy and really get Pakistan moving.
Inshallah. Thank you so much, Laith. It was a great session. Thank you very much.
Hello, thank you. Thank you, Laith, and thank you, Maheen. That was very enriching, and I think it opened a lot of departure points for us to ponder upon and to think about. just to think that development for us for the longest time meant industrialization and technology and going blindfoldedly into what we thought was an established economy, and only to realize that we are a frontline state for climate concerns, and everything now has to be gloved and entwined with sustainability for us to survive through this. We always thought that these are two spectrums, like sustainability or environment on one end and development on the other, but I'm so glad that Leith actually packaged it like this, that the development has to be now climate resilience. That's how we will need to look at climate resilience. And the way GuarantCo is positioned to take the risk off our hands, and all that goodness coming into this conversation was so heartening, and it was so encouraging. I'm sort of looking forward to what I can learn more. We have an upcoming session, a dialogue panel. I'll thank you, Maheen, and thank you, Leith, for being with us on stage. I would like to request Moin Iqbal, Head of Business Origination Infrazamin, to join us on stage to moderate the upcoming session on developing private sector markets to finance long-term projects. The question is on the private sector and its connection with the public that allows and facilitates growth. Malaysia has one of the highest quality infrastructure amongst the ASEAN countries. In a study by Goldman Sachs Global Economics, Malaysia ranked number 1 as one of the highest in quality score at 5.1 compared to South Korea's 5.9, Thailand 4.6, Indonesia 3.8, and the Philippines 3.2. A key factor for the successful implementation of the country's infrastructure projects is the adoption of public-private partnerships. They ironically call it PPP. In the early 1980s, this partnership allowed the government to launch more infrastructure projects by sharing the burden of funding these projects with the private sector. This, in turn, has made the private sector an important engine of national growth. For the upcoming dialogue, I would like to invite Zafar Masood, President and Chief Executive Officer, the Bank of Punjab; Syed Monis Abdullah Alvi, Chief Executive Officer, K Electric. And it was lovely to hear K Electric being mentioned for the success stories that they have. Farooq H. Khan, Chief Executive Officer, Pakistan Stock Exchange. Naz Khan, Principal Country Officer, International Finance Corporation, Pakistan. And Yasir Qadri, Chief Executive Officer, UBL Fund Managers. Now that's what we call a financial and power top line right here on stage. I would want to now hand over to Moin. Thank you.
Hello. Yeah. Respected guests, esteemed speakers, and distinguished panelists, Assalamu alaikum. Thank you for being here. I'd like to welcome you all today for today's panel discussion, Developing Private Market for Financing Long-Term Projects. Pakistan, as a developing country, has significant infrastructure needs, and unfortunately, that's coupled with a significant financing gap as well. Historically, the public sector has played a major role in that domain, but increasingly, for various reasons, budget constraints and others, the private sector needs to raise their hand up and needs to be crowded in. Today, we have a very esteemed panel to discuss the challenges and opportunities that come along with crowding in the private sector, and I hope we will touch upon key aspects as to how we could take this way forward. Thank you. So just in terms of the flow of the conversation, I'll go through with a question each with each panelist. Please try to limit the response to 5 to 7 minutes, followed by a follow-up questions in the same sequence, and hopefully there's enough time for the floor to be opened up to questions as well. So Zafar Saab, based on your vast experience in the banking sector, in your opinion, what's been their role in developing infrastructure in Pakistan, and how do you see it evolving going forward?
Thank you, Moeen. Thank you, Infizaman, for inviting me to this very important conference. I have a special relationship and bond with PIDG, as Laith mentioned. And it's really good to be here today sharing some thoughts on very difficult question that Moeen has put to me, especially because if I were to be honest, then my community won't be very happy with me. But nevertheless, as you rightly pointed out, in order to explain the whole situation, let me just try and share with you the perspective of the banking industry in Pakistan and a bit of a history. So in 60s, 70s, and 80s, it was absolutely the public sector specialized institutions which did the trick for Pakistan as far as the infrastructure financing was concerned. But since 90s, the equation changed. These specialized institutions, due to lack of governance, evaporated. But at that time, their role was kind of split. The structuring piece, which is the most important piece when it comes to project financing or infrastructure financing, was taken over by these international financial institutions, and particularly the banks were very active then. They actually had a very thriving project financing teams on the ground. And then, of course, they could resort on their international connections as well to get the best examples to replicate. So Citigroup, ANZ Grindes at that time, even the World Bank was involved in HUBCO project, the structuring and all. That was all done. In the road projects, it was ADB, for example. They made a major role in terms of structuring. The funding piece also came from them, but the local funding was catered to by the local commercial banks. Then another wave came through. These international financial institutions exited Pakistan or depleted their operations. The commercial banks, and then the commercial banks had to take the burden forward for doing the infrastructure financing. They lacked expertise. There is a serious problem as far as the asset liability is concerned. If you look at the statistics, only 1.2% of the total deposits are beyond 5 years, of the total 23 trillion that we are talking about. And then, it needed a better treasury management also, because if you look at the current and saving accounts, those are around 17 trillion. And we ran a regression on it, and we think that, a 50% of that could be used for a long-term positions. So all in all, the funding pot was also merely, 8 trillion rupees. Today, if you look at the outstanding of the infrastructure financing or project financing, it's around 3.5 to 4 trillion rupees. So that pot of 4 trillion is still available out there, but the requirement is so mammoth for the future. And just to give you a sense, if I were to plot a 10-year GDP forecast for Pakistan, the requirement is around, and the backlog of infrastructure, the requirement is around 5 trillion rupee a year for project financing and infrastructure financing. Not going to happen through this kind of funding pot. And if I were to take into account the government's support there as well, we are talking about around 1.5 trillion coming through next year. In the last 5 years, by the way, and I'm including both the provinces as well as the federal government, the contribution was merely 8 trillion rupees in the last 5 years, which is nothing, and that's why you have a larger backlog available there. So all in all, the banks have not done enough, and I don't think they'll be able to do enough going into the future either, until and unless there is a real shake-up in the framework, and the incentive structure which is out there is put in place. When I say this, PPP structure, somebody talked about, the tech structure, the capital relief structure to the banks, all these have to come together, and then of course the ecosystem has to work. The bourses have to deliver as far as the secondary market is concerned. The pension funds have to participate. The insurance companies have to come through. But until unless we have the starting point, and somebody asked this question, or there was some discussion earlier, the starting point is to get that asset class right, and then the liability will be stretched on a term basis, and we can attract that funding from pension funds and insurance companies.
Thank you for the candid feedback, Zafar Saab. Moving to so historically, capital markets have played a limited role with respect to infrastructure financing in Pakistan. In your opinion, what confidence-boosting measures need to be taken to open up that channel?
Sure. No, thank you so much. And again, thank you for having me here. It's a really important subject and conference. And I think in response to your question, I'd just like to state the capital markets are open and ready to provide debt financing, including for infrastructure, but for other purposes as well. And I mean, there are some issues, kinks, etc., that need to be worked out. There's some, taxation issues otherwise. But I think the basic problem has been, or the challenge has been, as Zafar was pointing out, I think the banks have been voracious in their appetite in investing in bonds, whether government or corporate, and holding on to them. If you see banks globally, internationally, in fact, long-term financing is all done in the capital markets. Banks don't have the kind of balance sheet and the kind of gapping that they would have to do 10, 20-year, bond financing. That's not the case here. So I think it's part cultural. I think capital markets and the banking sector for too long have been working in silos. Over the last few years, we've made a lot of effort, and I'd like to acknowledge the banks and the central bank, as well as the capital markets, that we've tried to break those silos down. And I'll just share two transactions when I said the capital markets are open and ready, as an example of what has happened and needs to happen much more. So some time back, the government did a large 200 billion rupee sukuk issue, and they had an offer for a bought deal from banks as well. With the SCCP's support, we were able to convince the ministry to do it through the capital markets, and the government saved almost 100 basis points in interest costs. That's 18 billion that, with apologies to Zafar, would have gone straight from taxpayer to the bank's bottom line. But the issuer benefited, the investors benefited. And the banks were still the major buyers of that sukuk, as you would expect. But it truly, the tail wagged the dog. Instead of 8 banks, there were about 70 investors that came in, including mutual funds, pension funds, HNWs, etc. And what the capital markets do is they provide a competitive framework, a competitive landscape for transactions to take place. The pricing will be what the pricing is, whatever the market dictates. But you need to have a process and a framework in which the issuer can get the best financing rate, and that's what capital markets provide. And as Dr. Shamshad, the PSX chair, makes the case always, there's no subsidies in the capital markets, right? So that's one issue, that there are a lot of subsidies that the banking sector provides, which distorts the whole, whether it's in long-term financing or short-term financing. So you asked about challenges. That's one challenge. I think the other transaction I'd like to quickly share is in REITs. Recently we had the first developmental REIT, and that's quite unusual. Even in most developed markets, Most of the REITs are rental, not developmental REITs. And it was successfully done, heavily oversubscribed. By the way, as was the Sukuk. The Sukuk was 1.7 times oversubscribed. This was, I think, 2-3 times oversubscribed. And again, REITs is a really good instrument for a particular type of infrastructure development that can be developed and used, and the capital markets can be used, to provide such infrastructure financing. And I think the banks are also realizing that the kind of requirement there is, it cannot be, even if the banks wanted to, they cannot, meet that alone. Just the kind of housing schemes that were, being envisaged, the banks' balance sheets could not support them unless they were able to refinance from the capital markets. And I think the other really important aspect is, although we're looking at this from the debt side, is, one of the challenges that Pakistan faces as an economy is both a very low savings and investment rate. And as we bring in these new instruments in the capital markets, it also provides more opportunities, diversified instruments for savers, because, for every investment there has to be a saver as well. So, REITs provides an alternative savings instrument to investors. Similarly, bonds, compared to bank deposits, will provide a extremely good alternative to investors and savers. So I think if you look at it from both investment and saving side, using the capital markets really is essential. And many of the structural imbalances that we face as a country, cannot be resolved if we all really focus and make sure that the regulation, as I said, there are some regulations. For example, recently the government has given tax relief to foreign investors investing in T-bills and PIBs. And that's fair, it's understandable, we need dollars, but that should be for all asset classes. You should not create a tax-driven incentive for investors for a particular asset class, whether they come in equities, whether they come in corporate bonds. If you're giving that to foreign investors, it should be there for all asset classes. So there are such challenges, but I think a lot of it is cultural, and we hope to work particularly with banks, that they don't just do technical listings on the exchange, because what happens in a lot of the corporate bonds is that there is a private placement done, and then they do a technical issue, because a lot of the investors require that it should be a listed instrument. Now, how you do the primary offering determines how the secondary market works. If the primary offering is not done through a proper listing process, then you will not find any liquidity. So, even though it's technically listed, the banks are still holding on to all the bonds on their balance sheet, and it doesn't help them when they actually need to then use the secondary markets and the capital markets. It's not there. So my request through Zafar to all the bankers here would be that it's in our mutual interest to really use the capital markets for long-term financing needs. Thank you.
Thank you for the heartening message to promote and encourage capital markets, and to know that PSX readiness level is high on that front. Assalamu alaikum, Munas. KE has been one of the entities which has very successfully tapped local and foreign debt capital markets. What were the challenges that KE faced, and how did you manage to open up these channels? Because over the past few years, KE has managed to successfully do multiple transactions in that.
Bismillahirrahmanirrahim. Thank you, Moin. Thank you for inviting K Electric to this August forum. I think we have done well in terms of supplying electricity to a city which has 40% undocumented population, and it is extremely difficult to stop stealing and collecting what is due to us. With all this, we have reduced the losses from close to 36% to 15%, and recovery has gone from 80 to 95% the last year that we have closed. So when we started this journey and prioritized in 2005, and we started in KE the second phase of, I would say, not privatization, but changing how we used to work, and you were part of us at that point in time. So I still remember at that point in time, Treasury used to tell when Qasim power plant what would be the flow rate of furnace oil, because we wanted to avoid a situation where the sludge is being captured by the pumps. So we used to tell bin Qasim that your flow rate has to be 80 tons per hour, so that when we get pumping from PSO, we should have the machines still operate. This was the start. I don't want to go into a lot of details, but in 2015, we were given approval by US OPEC for $250 million for 14 years. So, a lot of hard work went into this journey. But I think the most difficult thing, or the most challenging part, was to show the lenders to have that confidence into KE. And again, the business itself is fundamental. In COVID times, while the entire industry and the commercial markets were closed, but we were still operating at almost 75 to 80% of what was supposed to be supplied at that point in time. So this is our business, and we have to ensure that we do what has to be done. And the banks have relied on us, including IFC and ADB. We were financed by IFC in 2008, IFC and ADB together, along with some ECAs. And then in 2015, we tapped capital market. And I'm not sure how many companies in Pakistan have prepaid IFC and ADB. We did that through a sukuk. And again, I think it was, I would say as KE, it was one of the best transactions of replacing almost $200 million of financing with a sukuk of 24 billion PKRs. So the confidence is created by the performance, but at the end of the day, I think the lenders obviously look at the business itself, because at the end of the day, if electricity has to be supplied, whatever is the growth rate, you still have to be available for almost 22 million people through 3.5 million connections. And if you do well, that confidence is there. And again, I would say if you look KE today, KE has a balance sheet which has the plant and machine, land, building, plant and machine, not the total of the balance sheet, at 450 billion PKRs. The investment plan, which we discussed yesterday also in the same hotel in the conference, is close to 500 billion PKR. So by 2030, we will be, I'm sure, will be higher than a 1 trillion asset base. So we need, and if we need to be at that level, I would say the financing to KE itself would be at least 600 to 700 billion PKR. So now you understand the per party of the banks in Pakistan, and including the capital market. Whatever we have done, the capital market, I think Farooq also talked about it, somehow the retail portion never comes. Although you try to have a blocked period also in which the banks cannot apply, but still the amounts that are subscribed during that period is very small. And ultimately, when that shutter opens, immediately you get applications from all the banks, and it is fully subscribed. So what we need to do is to ensure that we are sustainable, and I think inshallah, if we are able to do that, we will be able to tap all the markets, whether it is local banks, whether it is capital market, maybe retail bonds, perpetual bonds, sukuks, international bond, IFCs, ADBs, infrazamin. We already have a financing from GuarantCo, and we look forward towards doing more transactions of this sort, because if we need to ensure that the system is maintained and it is extended in case of demand, those cables and those meters, poles, transformers, grids, power generation, they have to be there. So this is, I think the biggest challenge would be that we're going to continue to grow, and we need this financing to come. Again, the shareholders have not been paid a single penny in the last 17 years. So we need to do something about the shareholders also. They tell us that the management works for the banks in Pakistan and international institutions, because financial charges are often much higher as compared to what we could have given to them. So this is a huge challenge as far as we are concerned.
Thank you, Munas. Naz, DFIs have played a big role in financing complex projects in Pakistan. Considering the current economic environment, what are IFC's views on infrastructure investment in Pakistan?
Thank you, Moin, and it's a pleasure to be here. So, listening to some of the conversation that's happened earlier, and you can see that all the audience is sitting here, so clearly it's a very important topic that we're discussing at hand. From IFC's perspective, IFC has a current portfolio in Pakistan of about close to $1.3 billion, and it's spread across over 40 companies, debt and equity, more debt, less equity. And IFC is looking to actually scale up that investment over the next 3 years and looking to double that. So, but the first and foremost thing, given the current environment, is obviously the macros. So the macro environment needs to be conducive. Given that we are, whether you're a DFI, IFI, so you're obviously longer term investors. So you can take a counter-cyclical view, and your mandate is to take a counter-cyclical view. However, what you do need is still that you should be able to foresee that the trajectory is upward. So I think in that context, when we're seeing the IMF and hopefully that SLA should get done, and we've taken some steps in that direction. And then after that, the reform that is necessary, I think that's some of the things that one wants to see. And then, the IFC is very keen to look at investing further, particularly on the infrastructure side. In fact, the majority of our portfolio is actually in infrastructure. I think no amount, and you've seen the kind of requirements, I think Zafar has pointed that out, other people have pointed that out too. You're looking at about 8 to 10% of GDP. That's the kind of requirement that you have on the infrastructure side. And those demands are tremendous. No amount of donor money or even public money, as in the government's money, because government is going to continue to face budgetary pressures, to meet their other requirements, is going to be adequate to fund these needs at all. And then in addition, you have obviously things like climate resilient investments that you need. So it is really important that you mobilize private sector to bring them in here. And then IFC stands as a development partner over there to help mobilize that and bring that in. But it is imperative that you now actually bring that in. And this is, my view is that an opportunity like this, when you talk about the macro side, and now that we're taking the steps to rectify that, never lose a good opportunity. And this is probably the right time for us to actually step in and build back better.
Thank you, Naz. I think great to know of IFC's continued support and focus towards Pakistan, and hopefully you will see things changing around. Assalamu alaikum, Yasir. Mutual funds have historically stayed away from infrastructural projects in Pakistan. What, in your opinion, needs to be done to get more interest from mutual funds and AMCs to bring them into the ambit of infrastructure financing? I think you need to press the button.
Okay, thanks. So yes, we, in terms of product development, we may have lagged a little bit because we have a bit of an asset liability mismatch. Most of our business, well, all of our business now is open-end funds, which is a daily, kind of a liability fund, and matching it with longer-term assets, that's where the challenge lies. Closed-end funds, fixed income, infrastructure closed-end funds, I think, is probably the answer to that, and that can be done working with capital markets. And I think mutual fund industry in the past has worked closely with issuers and arrangers and organizers to structure the bonds in a way. I mean, K Electric, I think, takes a leadership role. They've done everything which could possibly be done in the last few years. They've borrowed from banks, from public directly. They've had retail paper. They've had short-term commercial paper now, the mutual funds being one of the larger suppliers. So I think what is or has been demonstrated is to some extent the capability of funds to mutual funds to raise funds. So I mean, for example, for short-term commercial paper, we've now become, I think, the major supplier. For microfinance demands or liquidity, we've become one of the major suppliers. So I think if we can fill that asset liability mismatch gap, that could be a start. And as Late said, if some part of the credit risk can be taken off the table, that would provide a lot of comfort. That is, I mean, the nature of the beast. Our investors or unit holders, most unit holders in Pakistan are kind of risk averse. I think that has to do with the external environment as well. Especially these days, very attractive rates are available for practically taking no risk, or at least perceived risk for now. So I think that is something that will probably evolve with time. But yes, it is doable. We are now getting into ETFs in the fixed income space. So there is no reason why we can't do the closed-end funds. I think what we will need to do, I think, is a little bit of everything. So take away a little bit of credit risk off the table, maybe not all of it, but some of it. Have someone make market, probably not underwrite the whole thing, but at least part of it. Have someone provide the initial liquidity. Government pensions, I think, could be a very, very good avenue. So I think, the government can move from the liability to the asset side. It really tantamounts as double counting for them. They can actually provide pension funding that can end up into infrastructure, because government certainly does not have the fiscal space to fund large-scale infrastructure in the near future. So that's actually an opportunity for the government. We will, of course, need to work closely with the regulator, perhaps make some regulatory adjustments to do that. But probably the appetite may be there. If we do a little bit of these things and get the structure right. A lot of homework, not easy. It will be a challenge, but I think the appetite is there. Probably closed-end funds could be the way to go to fill in that asset liability mismatch.
Thank you, Yasir. Hopefully the asset liability mismatch gets addressed sooner than later. KE has been a success, and hopefully we will see the mutual funds coming to be a major player in infrastructure financing. Coming back to you, Zafar, a few more difficult questions to put you on the spot. In your opinion, how can we shift the banking mindset to support longer-term financing, 15 to 20 years? Or is that even possible for banks, considering the amount of funds that are required?
No, it's very much possible. There's no reason why it can't be done, but then there are certain prerequisites, starting with the existence of the dormant borrower. I looked at the number this morning only, and in February alone, the investment of the bank's deposits into government securities is 83%. So merely 17% is out there for the private sector. The challenge here is that the government has to make certain moves, and I say government because the starting point is the government here. They can't do that on their own, especially with the difficult economic environment. But more so, the funding requirement is so large that the government cannot prioritize that as the thing. The private sector has to come through. Maheen quoted the example of Nigeria. In Nigeria, that was the government pension fund which did that bond. In Pakistan, and Yasir was just mentioning that, in Pakistan, the government pensions are unfunded. So the large part is missing there. So there are Yasir has been very kind by saying small little things. I think there are larger things which are required to be done from a policy level to actual action on the ground before, this kind of thing is available for the banks to take it forward. Another tragedy, I would say tragedy, I am a bit of a non-conventional when it comes to these things, has been the privatization of the banks as well. The priority, the foreign banks exited, the local banks did not have the expertise, they probably will struggle to get those expertise, and the institution like Infrazamin has to bring that on the table, PIDG has to bring that on the table. But the public sector also privatized. 80% of the assets were privatized, the banking assets. And the result is that the priority just disappeared. And with this kind of dominant borrower out there, unless you make the infrastructure investment attractive more than this investment, the government paper, the banks will never come through. So there is a serious shift required in terms of tax incentives, in terms of, as I said earlier, PPP framework needs to be more robust. The Infrazamin is the first entity. Frankly speaking, I would like to see many more of Infrazamins coming through. Pension fund, I have mentioned to you. Insurance needs to be more aggressive, but the starting point is the asset availability. And asset availability will only come through if the blended finance is out there, if institutions like Infrazamin and all are more active, and the government needs to take certain measures, as I said, on policy level and otherwise, to make things work on the infrastructure financing. Otherwise, it will be a challenge to go beyond. As I told you, merely 266 billion, 1.2% of the total deposits are in. It's neither here nor there.
I'm going to take some liberty. I'm going to ask you for another follow-up. You mentioned blended finance. So based on your experience, how's the receptiveness of the banking sector towards blended finance, and how could we possibly encourage more innovativeness?
Yeah, so in terms of need, obviously it can't be debated. It's required from two main reasons. One, the expertise piece, as I mentioned, that has to come from them. The other one is that, it has to be from a risk-sharing perspective. But the receptiveness of the banks is lacking primarily because there is lack of understanding for this product. And the second one is because the lack of motivation also. The banks are not motivated to take any extra risk, especially in this environment where, SVB example is, by the way, a very real example for Pakistan as well. We need to be very clear that this could happen here too. Obviously, there are certain marginal banks, there are stronger banks, but we need to be aware that the environment is such that the banks will always be risk averse. So until and unless the realization, the blended finance, and the public sector has to play a major role. Even if I stretch the pedigree of PIDG, it's all public sector. I mean, we're talking about first world, it's all public sector. What's the problem in public sector taking that view? It's really beyond me. And we have this strange concept of throwing baby with the bathwater by saying that, just privatize everything, government can't run anything. No, I don't agree with that. There are islands of excellence. There are governance issues which you need to address. But please do not make a blanket this thing that it has to be done. When I was on the board of State Bank of Pakistan, at that time, I had made a presentation to the board that perhaps the focus at that time was primarily how the infrastructure financing can be supported on the liquidity side. So the largest repository of liquidity in Pakistan are the banks, as Farooq said rightly. And if they are not very progressive, if they are not taking the step forward, then that repository will never be out there for development projects. So I had presented a paper to them saying that commercial banks, which are the largest repository of the deposits, they need to keep their horizon of lending, because this is the best we know. We are working capital trained banks and bankers. We can't look beyond 3 to 5 years. But for infrastructure financing or project financing, you require a long-term funding, and that's where the role of specialized institutions come into play. And that's where the institutions like DFIs, the joint ventures that we have 5 or 6, they should be given, and it requires a shake-up in the regulatory framework. The liquidity should be passed on to them, and they should be then specialized in doing that project financing, infrastructure financing. I would now go to the extent of even saying that they should pick up those specialized areas where they can extend those funding. For example, there could be one of the DFIs which will only focus on the climate financing. It's a very specialized area, so on and so forth. So therefore, a major shift is required all across the mindset, the policy, and the real actions on the ground to make things work in this space.
Thank you, Zafar. Considering the current economic environment, the high interest rate environment, a lot of projects and companies are in stress. Possibly a lot of restructuring in the future. What role can PSX play in refinancing operational projects via the capital markets?
Sure, and I'd just like to pick upon a couple of points that were raised. First of all, to Moni Saab, next time you do a Sukuk issue, we will work with you. Would you give a slightly preferential rate perhaps to small investors who are your customers? With every bill, we'll send an application form and hopefully get lots of, because you're absolutely right, the retail participation is small. But I think to be fair, we'll work together, absolutely. Capital markets work in an ecosystem, right? So globally, retail investors would access the capital markets, through mutual funds, through pension schemes, through their life assurance policies, and some will obviously come directly as well. And in Pakistan, all these sectors, particularly the pension side, and as Zafar was saying, the government pension side is, in its infancy. So that is a challenge that we have to, surmount. The fourth big player, as Zafar was saying, the banks, they are not really incentivized to really innovate and go on the keep pushing the risk spectrum. And the government is also responsible for that. I was looking at a World Bank study, very, very recent. Pakistan has the highest credit exposure to government security. 70% of banks' credit portfolio is gone up to 83. And I think the next highest was Ghana or something at 35, right? So, and that creates not just a huge amount of risk, but also, the kind of spreads and easy earnings. That's right, and Ghana's had their issues, right? So I don't want to go into that because that's a very different. But in terms of the current high interest rate environment, look, there is refinancing available. One of the strengths of our market right now is that there is a lot of domestic liquidity, right? There's been over the last few years a significant amount. At its peak, foreign portfolio investment in our market was about $8-9 billion. It's probably now well below $1 billion. But all of that selling has been absorbed over the years, and the market has been reasonably stable. In previous years, that kind of selling would have perhaps, created other kind of issues. So there is a lot of domestic liquidity, and many of the highly leveraged companies will need to look at the capital structures to rebalance their ratios between debt and equity, right? Because debt, whether through the capital markets or through the banks, will remain expensive. But do they need some more equity to be able to balance this out? Is I think what banks should also hopefully be encouraging their clients to do, both in the smaller SME sector as well as the large scale companies. And I think for good issues, as I said, even in this environment, there are a number of good issues that are coming, less than we were hoping and what was happening last year. But still, for any good issue, there is, the market is very much open. And you can get money at a price. It's a valuation, so it's you have to assess that, do I carry the risk of being highly leveraged, and will I be able to ride it out, or do I take perhaps a slightly lower valuation but get equity in, be able to gain market share compared to my competitors who will be struggling with high debts. So I think, but that's a serious business decision that hopefully banks will also be encouraging their clients to think through, and the market is open and has the liquidity to provide that.
Okay, thank you, Farooq. Munis, so far, I think the last few sukuks, the longer tenures have been 7 years. In your opinion, what are the expectations from the market for you to be able to target a longer term sukuk? What needs to be done at KE's end, and for the benefit of the audience as well, how they can target longer term financing?
So Moin, you have seen Government of Pakistan borrowing on the big infrastructure projects, whether power plants or the transmission lines, the big ones, the state grid one. So the Government of Pakistan provides a guarantee, and even with that guarantee, the tenors are not beyond 12 to 14 years. You talk to Sinosure or any agency, the Government of Pakistan, there is a barrier. So we have also borrowed on the same tenor. So beating the government probably is a bit difficult, because there is a glass ceiling as far as we are concerned. But I think the most important thing for even not only us but the government also is to consider that if you are providing a sovereign guarantee to a power plant which is going to operate for 25 years and the financing is only for 12 years, 10 plus 2 or 10 plus 4, the upfront tariff inadvertently is higher, because whatever you are going to basically use for 25 years, you are only paying the entire debt in 14 years or 12 years. So this is something which government has to consider, and we have heard that when they were doing those renegotiations, they approached Sinosure in terms of extending the tenors, but somehow it did not happen, probably because the government also realized that if they extend the tenors, the debt is going to be longer and the financial charges would be higher. So maybe the upfront tariff is higher, but the overall tariff might be increased because of the extended tenor of debt. So this is probably the biggest bottleneck as far as going beyond 14 years. We are already borrowing on 14 years basis. In case of K Electric, I think I would still really appreciate and thank all the lenders, because we have a 7-year tariff, and what we have filed in December will going to be inshallah approved hopefully in the next 3-4 months, and it will apply to 2030. Obviously the banks will take a view that a similar tariff will be extended, but if the predictability can be improved, I think the tenors can be longer in that case also. I think what and again Pakistan, obviously 14-year probably is, again, I don't know how many have borrowed, and in case of sukuks also, we have not seen anything beyond 7 years as far as we are concerned, and we can talk about the retail market, but at the end of the day, probably it would be more difficult to attract retail investors in even 7 years, and we struggle, and we'll try to work around it to find a way to attract them on that. But going beyond that to retail, and even the banks at the end of the day, they can just take the same exposure as loan rather than parked in investment, then corporate finance would be, in terms of exposure, it would be the same. So if we have a longer tenor of tariff, and Government of Pakistan also talks to all these multilaterals when we need to raise that kind of financing, and with State Bank also now wants to have dollar coming in for dollar projects. Obviously we understand the importance of dollar financing. You have to open LCs, you have to have EPC contracts in dollars, and if you fund from sukuk, then the dollar requirement as far as the country is concerned would be obviously higher. So I think that actually requires some effort at the state level. And if we talk about K Electric, please also understand that we are the only private utility, we are not a power project, which gets a tariff at the start of the project, and then we just go for variations or escalations. We are not NTDC, which is 100% government of Pakistan owned. They have their PC1s and they invest based on the government spending. We are not state grid. We are not any disco. So this is a huge, I would say, challenge. Also, the regulatory angle is very important, because I'm glad that Chairman Efra is not here today, because he has to give us a cost reflective tariff. And often the dispute comes between cost and prudent cost. And the prudence takes away the pragmatism in what we can do or we could do. So we would like a decent return, so that the debt can be serviced and the shareholders can also be provided something, and based on longer tariffs, based on cost reflective tariff, which can provide what we spend on. We don't make money on the basis of only sent out. We have to have those investment plans approved, and based on those returns, the costs have to be absorbed. So if the costs are not allowed, then ultimately the return component is compromised by costs which are there, which are not passed through. We have reported half-year financial statements. We have incurred a loss of 27 billion rupees, and I can claim, and I would say, Alhamdulillah, now the federal government realizes that KE is not contributing to the circular debt. It is now decided, they have given the statement that in the 3 trillion circular debt of power sector and another at least maybe 600 to 800 billion petroleum, K Electric contribution is 0. So this is what we can get, and I cannot disagree with Zafar Bhai, but I think privatization of at least the power sector is so important if we need to resolve this issue. Yes, obviously there are institutions which have to be controlled by the government of Pakistan, like PSOs of the world. They probably privatization would be more dangerous rather than beneficial, but in power sector you have to do this if you want to get rid of the circular debt. And the challenges are regulatory predominantly, and government of Pakistan borrowing at the right tenor, so that we can also go and negotiate with those lenders that if the cash flows are predictable, why we cannot be given longer tenors.
No, thank you, Munis. I think it's very enlightening to know. Sorry, go ahead.
Moin, could I just add
Yes,
something
please.
to what Munis was saying, and you touched upon a really important point of the tenor of financing available in Pakistan, and I agree 7 years is considered, 10 years long term, it's medium term globally. And I think one of the key things that we have to figure out how to break is that you need to have liquid and deep secondary markets. Even in the US, no one will invest for 30 years if they didn't know that they could, if after 1 year or 10 years, be able to sell in the secondary market, whether at a loss or a profit. And which is why the point that we were making earlier, that how you do the primary issuance, how you develop the secondary markets, it's critical if we are to go beyond this 7-year kind of limit that we are stuck with. And as Yasir said, to initially, the role of market makers becomes really important in that. So I know the Infrazamin can also do market making or not.
And again, Farooq, let me also tell you that in case of the listed sukuks that we have, even there is a market, people can go and sell, but they come to our counters for redemption, where they actually charged penalties. What we have told our own treasury and provident fund is that if someone comes to KE counter for redemption with a penalty, please don't charge any penalty. Our provident fund can buy. And we often tell them that you can go to some maybe asset management company and you can sell them, you can trade them, you don't have to redeem them, but they don't know. So that awareness has to be created for the secondary market.
Absolutely, that's really important. Yeah.
So Farooq, just to follow up, on that, in your opinion, what needs to be done to develop a more active secondary market? apart from the awareness that obviously.
I mean, there's no simple answer to that, but just a few of the points. I said that the first thing is, in whether equity or debt, how you do the primary issuance determines what happens in the secondary. So if you have a wide distribution in the primary issuance, then there are many more players as opposed to if there are only 8 or 10 banks that have taken the issue, that would be able to trade in the market. Secondly, the intermediaries have to understand bonds and fixed income instruments. By intermediaries, I mean the brokers, because they are the ones who will educate or be able to, as Monis was saying, if someone wants to sell their sukuk, they should be calling up their broker to sell the sukuk, not going to them for redemption. Right. So that's another building block that needs to be further further developed. Most markets actually have market makers, both in equities and debt. Our market historically has grown even in equities without the concept of a market maker, although informally there may be market makers. But I think to do this, and we have worked with this SECP, and for fixed income securities, we've actually worked with a number of banks who are now have become market makers in government debt securities. But there is very little volume. But I think market making initially will be essential to give confidence to investors that at a spread, or whatever the bid and offer might be, they will be able to buy and sell their securities. And the fourth, as I said, is that the ecosystem hopefully will keep developing, because the more funds that mutual funds have, and as Yasir was saying, that yes, closed end is not due. If they have large fixed income funds, even though they may be open end, they can assess their gapping strategy to put a little bit into long-term funds, because everyone hopefully is not going to take money out of the mutual fund at the same time. So mutual funds, pension schemes, insurance companies, have to grow in size as well, so that they are becoming larger buyers of such debt than just the banking sector.
No, thank you. Naz, from IFC's perspective, what are the main concerns or issues with respect to financing private sector in Pakistan? And how do we make projects more bankable? Or how does IFC's view on making projects more bankable?
Thank you, Moin. That's actually a great question. So when I pick up some of the points that were mentioned here, as someone who's worked in the capital markets for a significant portion of her professional life, the capital markets, the financing side is something that you can actually work out. The most important thing, as Zafar pointed out, is actually the assets. We need bankable projects, right? And there just aren't enough of those bankable projects. So when you look around and you look in the infrastructure side, I think other than maybe the IPPs, right, where you've had well-structured kind of projects, maybe port concessions, but that's it. There really is nothing out there for you which is bankable. And what do you mean by bankable is that the right incentives need to be in place, right? You need to have the right incentives so the projects are viable, they're feasible. You need to have good sponsors, you need to have proper regulatory frameworks in place, you need to have an independent regulator in place, you need to have the right partners to work with in the private sector and within the government sector as well, to be able to enable these projects to come to life. So that's actually what you need. Historically in Pakistan, as in most countries, the infrastructure side has always been developed, financed, owned and managed by the government. And if you want the private sector involved over here, it actually requires a significant shift, because you have to go from the government being the owner and the manager and the provider of infrastructure to actually being the enabler and the facilitator of infrastructure. That requires a big shift. And that's why it requires all these pieces in place. And you tell me any sector where you have that, you don't have that. So when you don't have the assets, what are you going to do? So once you have the asset, financing is a secondary part. So let's get the assets out there, which means that, and here is where you need to work with government, and the government needs to come. And I know at IFC, we've been engaged at the provincial and at the federal level. We want to look at water. Because, within the energy sector, we've done a significant portion of generation. We really want to look at transmission, at distribution, at water, at wastewater management, at grain silos, airports, hospitals. But we don't have those requisite kind of bankable projects there. So we're engaging with them, in a sort of a PPP model, or let's say a PSP, a private sector participation model, which is probably an easier one than even a privatization from a government's perspective also. So that's what one needs to do. So that part becomes really important. The other thing, I must say, Salim Raza once said, and I really liked what he said, that development is not a shareholder concern. And when you talk about infrastructure, it really is, it's development, right? So when you talk about banks investing X percent, 83% in treasury bills, etc., customers, banks, people are rational. They will do what makes sense to them, right? And if a risk-free instrument is available to you at that rate, why would you take the risk when you have shareholders to answer to? So which is why the development element needs to be separate. So when Zafar mentioned other institutions, let's say an Infrazamin or other institutions, it's absolutely right. If you look at the structure of the financial sector, 20 years ago, or maybe like 4 decades ago as well, it was actually a very good structure at that point in time, because you said that you want to develop the economy and you want to grow, you had infrastructure needs. You said we will have commercial banks to do this part. We will have development finance institutions local to do the development. Their mandate was borrow long-term, lend long-term and develop and invest in infrastructure. You had leasing companies, you had investment banks that had a separate mandate. So everyone was given their mandate to do. That never quite worked out for various reasons, and we know why. On the DFI side, yes, it may have been a political issue, it may have been a governance issue. But remember when we set those up, whether it was a PICIC on this side, across the border you had an ICICI. But it was HBFC on this side, you had an HDFC on the other side. You had NIT here, you had UIT over there. You had all those same institutions. Please look at the counterparts across the border. So, if we So the financing part, it is not something that I really worry about. Even the capital market, there's only so much you can tell the capital markets to do. That's not to say that the capital markets don't need to do work. There's a lot of work that needs to be done, but what will happen is once you start putting assets out there and bankable assets out there, I tell you that the capital markets, the banks, they will start responding and you will start unleashing this sector.
Let me thank Naz as well. Thank you, Naz.
You answered a very specific question to you. You think establishing a distinct fund for investing in long-term projects is something that can be more attractive for the industry to be interested in?
Gee, it could be. I think given, like I said, if, and probably little bit, as Zafar said rightly, was not the right phrase, but if some of these things fall in place, so if, there are liquidity risks, there are interest rate risks, there are credit risks, and if there are parties involved picking up, if not wholly, partly, these different risks, and if we can structure the bonds right, the investors, in some cases, need to, we never thought that we could raise microfinance money from the mutual fund platform, but we did, and quite a large sum too for that. So I think if we get the product structure right, it would be hard work and it would probably mean a lot of engagement between different stakeholders. But if we get that piece right, yes, it could be done. One thing is clear. I partly agree with Naz, but there is a lot of scope for infrastructure development, and clearly the federal government will not have the fiscal space to provide for that. They will not have the resources for at least the next few years. So it needs to come from somewhere. So infrastructure bond, I think it's not promoting infrastructure bonds. It's actually the need of the hour. If government is not providing those resources from its the fiscal side, then it needs to come from somewhere. And I think it is time now. We need to, as stakeholders, put our heads together, market makers, large financial institutions, capital markets, regulators, and I think all of us together can probably put a structure together which could be palatable. So, briefly responding to your question, yes, it could be done, I think.
Okay. And by the way, just to share with you, that was done, Yasir, the Kamyab Pakistan program that we did for microfinance. This is exactly what happened. The similar thing could, by the way, the risk was not 100% covered by the government. That's also important. In fact, 50% was a stretch. We could have lived easily with 20-25%. Monas, there's no glass ceiling on the guarantees, actual ceiling. Because of the IMF program, we have a constraint. So really, there will be no guarantees available as we go along. We are already at the brink. And this kind of thing that you're talking about, Yasir, has already been tried and tested. Now is the time to look at it from an infrastructure perspective.
Okay. I think thank you for a very insightful and enlightening discussion. I hope the discussion has been thought-provoking and we could bring about some change in future financing for infrastructure development. Unfortunately, we're running short of time, so we'll have to call it a day. Thank you to all the panelists, and thank you for hearing us out. Thank you.
Thank you. This was a learning session. I would request you to just stay on for a few minutes and request Maheen and Asfar to join us on stage. So we were talking potential, we were talking requirement, risk, long-term financing, mutual funds. And I think the most beautiful thing was the collaboration, instant collaboration that we saw between Monis and Farooq and Zafar all coming together. Let's do this, let's do that. And somebody threw the question at Maheen and Maheen nodded. And you know, that is perhaps the most beautiful outcome of bringing stakeholders together on one stage under one roof to actually talk things out. So now that we are here, I will request Mohammad Asfar Ehsan, please, to give away the beautiful book. My eyes are actually on the book. If I could request Asfar, please. Zafar Masood, President and Chief Executive Officer, Bank of Punjab. Syed Munis Abdullah Alvi, Chief Executive Officer, K Electric. Asfar, please. I'll request Asfar again to give away the memento to Farooq H. Khan, Chief Executive Officer, Pakistan Stock Exchange. I'll request Maheen now, please, to present the memento to Nas Khan, Principal Country Officer, International Finance Corporation, Pakistan. Maheen, again, if you could please present the memento to Yasir Qadri, Chief Executive Officer, UBL Fund Managers. If you could all come in front for a group photo, please. Thank you. The session started with Late and Maheen engaging into this wonderful conversation, and I think he's won over everybody on the floor here. If I could request Maheen and Aswar to please be here with us on stage for our upcoming final third session. So we have the final session coming up, and here we have two very interesting talks. Considering that it is the only barrier between us and the lunch, it seems all the more attractive. Not that it lacks any ingredient that wouldn't have made it spellbinding any which way. Capital market ecosystem. Capital markets are financial markets that bring buyers and sellers together to trade stocks, bonds, currencies, and other financial assets. Capital markets include the stock market and the bond market, and all that interesting references to sukuks here. They help people with ideas to become entrepreneurs and help small businesses grow into big companies. How and what can be done in the Pakistan context? What innovation or improvisations do we need? What local resource can be best adapted, and the role of the stakeholders. To develop a profound understanding and come up with the right questions, we are inviting our very illustrious, much-loved chairperson, Pakistan Stock Exchange, SSGC, and Karandaz, Dr. Shamshad Akhtar, on the stage. Our second addressee in the final session is also our guest of honor, Dr. Akif Saeed, Chairman, Securities and Exchange Commission of Pakistan. If I could request Akif Saab to join us on stage. Dr. Shamshad Akhtar is a Pakistani development economist, United Nations diplomat, and banker who also served as the caretaker finance minister of Pakistan. Before that, she served as the 14th governor of the State Bank of Pakistan, the first woman to assume this position. She also served as a senior advisor to the then Secretary General of the United Nations, Ban Ki-moon, and as vice president of the World Bank. In December 2013, Dr. Shamshad Akhtar was selected by the UN Secretary General as Under Secretary General and the 10th Chief Secretary of the Monetary and Social Commission for Asia and the Pacific, ESCAP. It is always a great honor to have you, Dr. Shamshad, with us. The mic is over to you.
Bismillah ar-Rahman ar-Rahim and Assalamu alaikum to everybody. It's always difficult when you are the last two speakers left, and when you are told you need to talk about capital market, and that also in front of the SECP regulator. So I'm going to try to avoid some of those things so that I remain safe for the remaining part of my tenure here. I have to say the topic is very close to my heart. We've done a lot of work in Asia Pacific on infrastructure. I think one of the things that you end up as last few speaker is to actually figure out what to say when everything has been said. And I feel I am almost in the same situation. But I'll try to provide a little synthesis of what has been discussed, because all the elements that have been discussed were a part of my notes and remarks that I was to make. So let me first talk about establishment of Infrazamin. It happened when I joined the board of Karandaz. It is a milestone. First of its kind SPV. It fills in a gap of infrastructure architecture, supported by the needed regulatory approvals and space which came through at a fast pace from SECP. So at Karandas, we are extremely proud to have incubated this joint venture between GuarantCo, InfraCo, Asia Investment, and Karandas. And I would be amiss if I did not highlight the fact that it's all because of the financing that came from FCDO that has been a long-standing development partner for me as a professional, but also for Karandas. It is important to recognize that ICP, it's unconditional, irrevocable, offers highly rated PKR denominated credit guarantees. It has the power to leverage long-term infrastructure finance from both domestic and foreign investor if there had been a conducive environment in which we were operating. So Pakistan actually has made some important inroads in structuring and implementing large-scale infrastructure. During different parts of my career, I have been affiliated and associated with it, and more recently, I had submitted a proposal for setting up an infrastructure bank, which fell victim to the politics of the various governments, unfortunately. Now that I'm not in the government, I can speak a little more freely. So, what are the major impediments impacting infrastructure development? One, as has been talked about, low infrastructure investment to GDP ratio at 2 to 3%, well below the required financing, which has been placed at 10 to 12% of GDP, according to the UNSCAP work that we did on infrastructure. Total infrastructure financing requirement is close to about $124 billion over the 2016 to 2040 period. And as an economist, we need to sharpen our pens and pencils and work out how much revenue we need to mobilize to provide public investment to leverage private investment. And that's the way to go based on my Asia Pacific experience. However, Pakistan's fiscal constraints limit public investment in infrastructure, which is critical, as I see, to attract private financing. And I'll dive a little deep, as was pointed out by our earlier speakers. Lack of long-term institutional financing and innovative project financing is the third constraint. I had the privilege of doing work on insurance sector reforms and pensions in my early part of career when I was based in Pakistan, and later on when I came, I was asked by Minister of Commerce to do an insurance industry reform program, which is gathering dust, unfortunately. It had so much potential if we really concentrated on insurance sector reforms. The reason why they are important is, of course, for all the talk we have had across the panel, that we really need to focus on trying to get more and more liquidity for the capital market. And unfortunately, that has been not fully understood, as I see, to make the story short. Then there's a fourth constraint, which is structural and institutional shortcomings of infrastructure sectors themselves. So you can't actually move in projects if you don't have a conducive sectoral environment where cost of purchase, for instance, I can talk about gas sector, that government decides what would be the price at which we will procure gas and at what price we will sell gas. So that's day one, making gas sector projects a failure, as I see. Turning to credit enhancement mechanism again. So credit enhancement mechanism and priorities have to be strategized. to not only meet traditional infrastructure finance requirements, but to be supportive of new emerging trends of infrastructure. And I'm trying to collect my work that I've had with the G20 think tank, where we have put in a lot of work into advising G20 on the way forward. But I will just try to be very simple for now, that post-pandemic, first there was a recognition that besides, say, energy and all the hardcore stuff, you need to prioritize healthcare, education, digital services, and areas like that. So now this has become a very emerging area, and at the Belt and Road Initiative discussion of the global advisors, all the 12 global advisors advocated that the BRI should now be directed from dealing with energy infrastructure shortages or whatever in Pakistan to moving to some of these areas. Second emerging area, as has been talked about, is that Pakistan climate vulnerabilities, which are now quite steep, and we have seen it visibly during the floods, they require investment in climate resilient infrastructure, climate adaptation and mitigation. And we all know that these are costly segments of infrastructure, so they add further to the cost, and they do require credit enhancement. And of course, we need to promote technological solutions. So each of these require InfraZamin itself to be equipped with sector thematic knowledge to ensure we promote sustainability, cost effectiveness, innovation, and enhance our leveraging power. So I think InfraZamin, once it's made a breakthrough on credit enhancement, and it has a niche local currency, then it needs to think of how to spur infrastructure itself to have a self-generating demand for infrastructure pipeline, which was a subject matter discussed a while back. But I have to say that success of InfraZamin, unlike the success of the banks who are making the highest profits in midst of the worst crisis, economic crisis Pakistan has faced, will have to carefully walk the tightrope, because its success depends on swift resolution of macroeconomic crisis. Macroeconomic stabilization will come, of course, with monetary tightening, which is happening, and is manifested by rising policy rate, which is all-time high, and we are all screaming about it, but do recognize that policy rate is still negative. And of course, we need resumption of flexible exchange rate management, so critical to do credit enhancement and have confidence in what you're doing. Reduction in fiscal deficit and build-up of reserves will ease the enabling macroeconomic environment, which ultimately is a fertile ground for infrastructure. Management of risk and its pricing will be critical. You have to calibrate this very effectively, and you all have the competence, because you have to manage the cost, credit enhancement cost, and not make it so unbearable that the party or the deal gets lost in the process. I'm just talking from my experience of credit enhancement at the World Bank and dealing with clients. So let me move now to the financing side from the macroeconomic. To promote InfraZamin's support for sustainable infrastructure, there is need, of course, and a subject matter that has been talked about extensively, to redirect large proportion of bank assets from treasury bills. It is the only way to release the funds for infrastructure. Can that happen in short term? Absolutely not. But Deep-rooted fiscal reforms is what we need. Banks' asset base, which primarily consists of short to medium-term deposit, carries the risk of a potential asset liability mismatch and prevents infrastructure lending, a long-term venture. Something that has been talked about, but I think it was also politely mentioned that banks lack the experience and capacity to undertake limited recourse financing of infrastructure projects because they typically do not provide, go for really real collateral security, as I see. And the project pipeline issue is a very serious one. And during my 5 years at the G20 in United Nations, when we had to spur economic growth, everybody advocated that we needed the bilaterals and multilaterals to put in more funding for infrastructure. All of them refused. And they said, you really need a strong project pipeline for the countries, and they will be able to attract the institutional, and I'm talking about global institutional investors' liquidity, but also there is huge amount of liquidity with the wealth management funds, and we don't have to go far off. It's in Dubai and other places. So if we had very strong project pipeline, we could do wonders. And I think with FCDO still being here, that is a venture that you should still fund rather than back off from Karandas. So let me, on the financing side, make my second point, which has been also alluded to, but I'm speaking from my direct experience as India's senior principal officer at the Asian Development Bank. We worked on infrastructure financing phenomenally. We were able to do so because there were multiple infrastructure entities. They were not shut off by the government. They were managed by very competent CEOs and leaders. So besides talking to IDBI and IFCI and ICI, with whom I have really enjoyed working, in 2006, the India Infrastructure Finance Company Limited was incorporated as a non-bank finance company by the government of India. We are still dabbling here on should we use the DFIs to do that. I mean, just go ahead and set it up, and we have the SCCP chair here, and he will support it if there were people who wanted to go forward with it. So properly equipped DFI or NBFI, whatever we call it, has the potential to crowd in investment from multilaterals like the ADB and the World Bank. I have seen it happening, and I have funded. I provided ADB 600 million, and Japan Exim stepped in with another 600 million. That's only one transaction I'm talking about of 1.2 billion. And they can raise financing from tax-free bond, long-term loans from institutional investors. IIFCL alone catalyzed a threefold increase in the flow of private capital to India's infrastructure projects, which not only helped in doubling the total investment in infrastructure, but also increased its share in GDP from 5 to 7%, and we are still hovering from 2 to 3%. Third, I think Farooq has talked beautifully on capital markets, and I totally associate myself with him, so I'll try to be very short on this. Of course, it's a platform for equity and debt, and it can finance infrastructure. There are lots of prerequisites that we need. Most of all, we need an effective yield curve, and ultimately, we do need to supplement this with fixed rate long-term bonds to, if we are allowed, and the market to raise that, that'll enhance liquidity and tradability in long tenure instruments, while also providing a hedge against interest rate risk. It's not the time to go for long-term bonds, but the moment there is a little sliding back, we could do that. Pakistan actually does have a very shallow debt market, 74 listed TFCs limited to financial institutions, insurance companies, and large corporates only. There's a huge appetite from ordinary people to buy long-term infrastructure bonds in other countries, so we shouldn't be an exception. But of course, government has to release the institutional liquidity and stop preempting by fiscal demands, and it should try to move all the insurance companies that are not as yet listed from their comfort zone to be moving into a space of lifting. The case in point is state life insurance, which is not even corporatized today. So how can we deal in an effective manner with them? The sorry state of affairs comes with numbers. Total financing through banks is barely 7.4 billion, and debt market is rupees 424 billion for a country of this size and the population requirement and so on and so forth. Farooq has talked about the sukuk, so I won't go into it. It was done when both of us were still not there, but we saw the benefits of it, and I think it was a very good initiative. And Islamic finance, which is growing, because Islamic finance, financial institution and banks are making huge profits. So it would be nice if banks kind of combine all their profits and even invested about 10 to 15% of their profits and really invested in infrastructure. Let me end by talking about green financing. In midst of the pandemic, the biggest international push was that you give multilateral funding to the countries affected by pandemic. You need to rejuvenate economies and you need to generate jobs. To set up green infrastructure funds or just green funds or green development banks. There is a huge amount of literature out there to do so. And I think and recently, since I'm working on debt restructuring at an international level, what we are articulating is that if you are going to get a good package on debt relief or restructuring in the G20, please make sure that this time around, that debt relief is actually directed into infrastructure financing platforms or green financing so that we get the simultaneous edge out of this. So the debt relief doesn't go to pay for activities that are not productive. We should really invest now the debt relief in productive investment. The last point, 2 points that I would like to make on financing is blended financing structures. We've talked a lot about Karandas. It is one actual example of blended finance vehicle with over rupees 23 billion invested in greenfield and expansion projects linked to SMEs, but it is also helping infrastructure. And we have been able to crowd in around 3 times its funding in private capital, and so on and so forth. So public-private partnership is a subject that I have worked phenomenally, and I can tell you PPPs are a very good mechanism to have sustainable infrastructure development. I'll stop here because I know all of you are waiting to hear from SECP regulator, who will bring in much more depth. But in terms of my trying to synthesize, Pakistan needs over $120 billion is what I have talked or so between now and 2040. Prerequisite is macroeconomic and exchange rate stability. Infrazamin can do wonders in credit enhancement in local currency. It is an innovative platform. Moving forward, government needs to scale down fiscal deficit, listen to the IMF. It's not a bad thing. I've seen it happening in other countries. You have to enhance tax GDP ratio. It is the only way to reduce fiscal preemption of commercial banks and institutional investors. We should be developing infrastructure bank and specialized institution. The more we have, the less it is. We should help them compete with each other. PSX has the potential to broaden and deepen capital markets, and Farooq has his job cut out. He knows we are working on this 24 hours when we are at the PSX platform. So I want to thank you all. Sorry, this is a subject I have worked phenomenally, so if I have taken you a little on a tour guide, I apologize for that. Thank you.
Thank you. As always, it is a great learning opportunity just listening to Dr. Shamshad. So she's been talking about public investment to leverage private infrastructure. She's spoken about long-term, innovative approaches, what is required, a long-term framework, deep-rooted fiscal reforms, and then the debt market, which is 424 billion, if I'm not mistaken on this. So listening to IMF may be the best answer, and other countries have done it. I liked that. Carrying on this talk further, we would like to invite our guest of honor and final speaker for today's summit, Akif Saeed, Chairman of the Securities and Exchange Commission of Pakistan. Akif Saeed is a financial market specialist with over 30 years of post-qualification experience, including 25 years of banking and capital market experience, with a successful record of originating and closing deals and implementing policy and operational level reforms. A specialist in all major areas of the capital market, like market infrastructure development, risk management, governance, product development, international collaboration, market reforms, and non-bank finance companies like mutual funds, private pension funds, real estate investment trusts, investment banks, mudarbas, and insurance. He was part of the team that developed the Financial Market Development Plan 2020 to 2027 under the Asian Development Bank Program for the Government of Pakistan. Akif Saeed, ladies and gentlemen.
Not a good idea to call a regulator before the lunch. I hope I don't undermine your appetite. Bismillah ar-Rahman ar-Rahim. Honorable Chairperson, Pakistan Stock Exchange, Madam Shamshad Akhtar, Maheen, CEO Infrazamin, Asfar Hassan, CEO Nutshell. Distinguished ladies and gentlemen, Assalamu alaikum. I would like to begin by thanking Infrazamin and its CEO, Ms. Maheen Rahman, for organizing this summit. I must say a timely and thought-provoking so far discussions. The timing and the theme of this summit is very relevant considering the significant shortfall we face in the realm of infrastructure financing in Pakistan. When we talk of economic growth, especially in the context of emerging economies like Pakistan, the importance of infrastructure project is second to none. However, fiscal and public debt constraints remain a constant challenge. Therefore, in order to ensure sustainability of infrastructure development, it is critical to attract private investment in this domain. Maheen in the morning talked about aid drying up to the developing economies. Joe Meyer went to the extent of it's a blessing, and I tend to agree with her because challenges pose us to act and take it as an opportunity and come up with innovative solutions. So for me, it's a challenge, but at the same time, an opportunity. Projects such as energy, transport, water, etc. form the backbone of economic growth, driver of long-term sustainable development. At each of these mega projects not only benefit millions directly, these chart the future course for coming generation by improving their quality of life. Add to this what we have experienced in recent years, particularly last year, in terms of the floods and the climate change. I think the need has further amplified in terms of infrastructure, focus on infrastructure. I'll slightly highlight the discussion since morning. For me, the focus primarily has been the origination, the assets, and the financing, and how the financial sector is geared towards shorter duration compared to longer term, which is required. But I think there's another aspect to it which is positive, is the structuring of the deals itself, which you let's mentioned in terms of how GuarantCo actually covers or attracts investors into it. I think that part will develop not only the governance and other aspects of the borrower, but actually help the banks, the financial institutions to look at the projects rather than at the entities. That's the traditional way of looking things in Pakistan. In terms of infrastructure, there are numerous success stories from around the world. Some of these were touched in the morning. In Pakistan, although some activity has been witnessed in this space, especially urban transportation, telecommunication, and power sector, something which was discussed in the earlier session, it is a cause of concern that Pakistan's infrastructure spending is well below investment requirements of 8 to 10% of GDP. Governor State Bank mentioned a figure of 2.1% of GDP in the morning. So we are well below the global general benchmark. Moreover, as the infrastructure projects are primarily reliant on government spending or by commercial banks against the government guarantees, the investment gap is expected to continue to grow. With the aid drying up and the fiscal space narrowing down and no future or a near-term respite in the sight, I believe the burden in terms of funding would be depending on the non-banking financial sector. Farooq mentioned in terms of 4 pillars: banking, insurance, pensions, and mutual funds. 3 of those fall under the purview of the Securities and Exchange Commission of Pakistan. I think I'm taking the whole summit in the even though it is focused on infrastructure, but in my view, we have to look at the debt market as a whole and look at the development. Reason being, it will free up the balance sheets of the banks, and this is where then the funding can be channeled into specific projects also, be it long term. There are a few positives, particularly in the context of pension funds. One of the provincial government has already decided and announced defined contributory pension system for new hirees. Mutual funds are already geared up for that. I think it's a matter of time. The other provinces, or even for that matter, federal government may actually take that route. So that will develop a long-term pool for such infrastructure financing. When it comes to insurance, I looked at the numbers before coming over. Life insurance have assets close to 1.8 trillion, 1.1 is in government securities, and only 22 billion is into debt market. So a lot needs to be done there in terms of be it regulatory intervention or even the capacity building. BMA, Muzammal is here, at one point in time was the leading player in the money market and the debt market, but unfortunately over the years even the capacity is not there in terms of the trading and even the understanding of the secondary market trading itself. Therefore, the summit is very relevant to our current situation and future aspirations, as all stakeholders need to deliberate and address the issues highlighted today. The country's limited resources make it difficult to invest in infrastructure projects, while its regulatory landscape is complicated and fragmented. This is where the coordination between the 2 financial sector regulators and MOF, because throughout the discussion we've talked about debt market, but very less, or I think hardly any discussion has taken place in terms of the proverbial elephant in the room, and that is the government of Pakistan. We need to look at the debt office. We need to look at the NSS. What is their contribution? What needs to be done to restructure and channel those fundings into infrastructure or a longer tenor projects. A limited number of fixed income securities with a maturity past 15 to 10 years. These are I'm going to highlight the key challenges, which are, some of them are very obvious and known, but nevertheless, prompting many institutional investors with long-term horizon to allocate elsewhere. This is especially one of the major factors hindering the involvement of insurance companies to consider infrastructure investments. Outdated regulatory framework and onerous compliance requirements contribute to delays and cost overruns. It takes courage to stand up and accept what needs to be done, and we are willing, and we are willing partner. We want to partner with Infozamin and look at the framework wherever they need help in terms of developing the whole debt market and the infrastructure financing. We will definitely provide that support to them. Lack of transparency and consistency in regulatory processes which create uncertainty for investors, especially for private investment. Public sector insufficient capacity for project preparation and implementation. As a regulator, SECP has focused its efforts on introducing various enabling provisions in the regulatory space, paving way for infrastructure financing through both equity and debt modes. Key achievements or key highlights in the recent past has been approval of the government debt security, something which Farooq touched on, and even Madam Shamshad. Market making facility has been, or the framework has been put in place at the PEMEX. Infrastructure funds framework is there. It's a matter of time. We need to sit down and actually make it work. Having a framework is not even the half the job. Key thing is to make it workable and implementable. Public-private partnership is another area where we have developed a framework for REITs, but as overall public-private authority needs to be engaged, and we need to work out mechanisms whereby they can actually understand the market needs, and there needs to be a dialogue between public-private authority and the PSX even, and we can facilitate in that regard. These measures are complementary to the State Bank prudential regulations, which Governor Saab mentioned. They have been introduced back in 2016. I've talked about some of the challenges that we face, the corresponding regulatory interventions. Here I would like to touch upon some areas where I believe further actions are required. First is there is a dire need for development of infra financing instruments that are structured in a manner that appeal to the investors. One such attraction is the provisions of credit guarantees in line with the debt issuance globally while meeting the local investors' needs and preferences. Similarly, not having enough with enabling environment for issuers to invest in infrastructure instruments. Unfortunately, in Pakistan, there is very limited supply of such assets today with a lot of competition for the existing projects. Secondly, improvement in risk management structure in project design phase is vital. Given the long-term duration and the complexities involved, especially in case of a PPP structure or a forward-looking approach needs to be implemented. I think this is where the GuarantCo's and Infozamin's global know-how should be help to the market. Lastly, there's a need for identifying market development areas. I think this is something which we need to learn from international experience, be it in Malaysia or in other Far East countries. We need to have a dialogue within the different stakeholders so that we have market development areas can have a significant impact on streamlining the regulatory requirements by providing a focused and coordinated approach to infrastructure development. It will also address some of the key hurdles I highlighted a moment ago. I'll repeat, reduce complexities by streamlining regulatory requirements and reducing duplication. Faster approval process by consolidating regulatory processes. Increase transparency by providing clear guidelines and standards for infrastructure development. Attractive environment for private sector investment by providing a stable and predictable regulatory environment. We at SCCP are open to any suggestion within these areas, and we will help not only the infrastructure development, but the overall debt market. In conclusion, I would like to reiterate that everyone present at this forum must work together to make this possible. However, there are also several challenges that must be addressed to ensure its success in Pakistan, including regulatory hurdles, financing gaps, and consistent economic policies. Addressing these challenges will require a coordinated effort from all stakeholders, including the government, private sector, and civil society. Nevertheless, the outlook for infrastructure, financing, and development in Pakistan remains positive, and with the right policies and partnerships, Pakistan can realize its potential for sustainable and inclusive infrastructure development. In that, I would like to thank Infrazamin again, and we at the CCP look forward to hearing your feedback and remain available to provide any or all support for infrastructure development in Pakistan. Thank you.
Thank you. Market development, long-term framework, and that we are willing to provide support and wish to partner with Infrazamin and other collaboration coming in. I think this is what I treasure out of such summits and such get-togethers, where the stakeholders come together, and their coming together is never without an outcome. And the outcome is so wonderful, especially in the condition that we face in Pakistan today for the lack of infrastructure. This is something that has been reiterated time and again. And I don't know how far can we look into public support coming in here, though I know that has sort of dominated the conversations. But private initiative and private sector can mobilize, and it has been done internationally and globally. We have the expertise right here, so there's no reason for us to give up or lose hope. There's plenty of competency, talent, and potential here in Pakistan to see that happening. We do have some time for Q&A, and we can take a couple of questions if there are any on the floor. Do we have any questions? Yes, we do. Can the mic be brought here, please? Thank you.
So the regulators, of course, this is where Pakistan priorities need to be. We can develop nuclear weapons. So that is doable, but we cannot develop our infrastructure. So I think it's more about getting our priorities right rather than having any policy matters as challenges. So that's one thing that we need to do. All the other nations can do it. Why can't Pakistan? This is no question to me, at least as a private entity. There are, thousands of opportunities available. Asfar has talked about as Board of Investment Head. Overseas Pakistanis are willing to invest into Pakistan. The trust deficit is there. Where does the trust comes into play from the? So I think the regulator needs to pull up the socks and start working. Thank you. Sorry for being candid, but I think we need to have our moments of truth.
I think I'll only say that the regulator do not operate in vacuum. So there are things which are beyond SCCP or State Bank or even other regulators, be it PEMRA or GRA. And unfortunately, the tangle we are in at the macro level needs miracle, maybe, but I think my approach has always been to engage and communicate. This is where a lot of things get sorted out. Any reform has to be underpinned by the communication, and of course the communication has to be honest and transparent. So first of all, as I was just discussing with Maheen, was to actually acknowledge what is the problem. So that's the beginning, that's the first point. Second is, of course, the solutions. Solutions can be many, one has to be practical also. Since morning, discussion has been going around in terms of 15 years. And I've been thinking, sitting there and thinking, okay, even if we can start with 7 and 10, that's good enough. Or even for 3 years, a vibrant debt market is the starting point for me, at least. And of course, the tenor will be increased as we go along. But communication, when it comes to reforms, any reforms, and I'm saying based on my own personal experience, is the communication and honest communication. First of all, acknowledge what the problem is. And this is exactly what I just said in my speech. We have certain issues, but we need to talk to the market and the stakeholders to address the framework or the regulatory framework wherever we can improve. But of course, we cannot and we do not operate in vacuum. We can do to an extent which is our mandate as a regulator, be it SECP or State Bank.
Thank you. Yes, do we have one more question? Good question. Yes, please go ahead.
Assalamu alaikum. My name is Yusuf Iftakhar and I am CEO of BMM, Building Material Mall. First of all, this infrastructure summit is a very valuable and informative for us, and it is going to open new ways how to build nation. I just want to give an answer to the first question person, why we build atomic and we are not going to build the nation economic, because the nation is built by teams. The team who have given that task to make them atomic succeeded, but the team who is working on the economic is in the pipeline. So it doesn't matter. It is just a matter of time, and I think we are going to succeed, and Pakistan has so much potential. Thank you.
Thank you for your positivity. Of course, it is the intent and it is the enabling. And of course, both have been referred to, discussed, and explored in detail here. I think the route is clear, and it will now depend on us how do we take it forward, and we hope to do a good job out of it. I would request now we have one more question? Yes, please. And this is coming from an expert.
Sorry to keep you from lunch, but one thing that I heard in the last session quite a lot is the lamenting of the lack of bankable projects and the lack of assets. All the rest of the architecture appears to be in place or be in train, shall we say, and being worked on, but the lack of bankable projects seems to be the issue. So how do we increase that pipeline? I mean, I've spoken to a lot of people here in the break. There are loads of great ideas. There are loads of people who want to build that infrastructure and have ideas for building it. So what are we lacking? Are we lacking equity? Are we lacking project development? What is lacking to actually bridge that gap between the architecture of the capital markets and the ideas that people have and the projects they want to bring?
So I'll address that one very quickly. I think it is the availability of a project that's ready to be backed. So like you said, a lot of fantastic ideas. And every time we engage, we find there are many, many companies that come to us, a lot of them in the private sector, say, we have this idea, can we build something around this? And many times what happens is when we ask them to open their books and we ask them to put down things in sort of binary numbers, that's when the project development aspect begins to get a lot weaker. So the need or the requirement for good transaction advisory, objective transaction advisory, it doesn't always have to lead to a guarantee or a debt or an equity financing element of it, but it really has to build a project that makes sense on a commercial scale. I think that's the key sort of issue that, you know, even people like the World Bank, the IFC, the ADB, and even us at Infrazamin face consistently. So the way we have engaged on the ground is that we bring these projects to us and we park them as a nursery. And we say, okay, we will get advisors in to see if it can be done and if it can be structured. By and large, the project owners have to show willingness to go through that process. And that means there has to be that commitment. And let's be clear, there's no easy wins. This is not like you turn on a tap and money comes out. You have to be committed as a project owner for the next 10, 15 years that this is your baby. You are going to see it through the infancy phase. You're going to get it to the stage where it can be financed and then let the markets take over on that part. So that's a really important point here. And it is something that the entire private sector really has to be responsible for. And just to address, I mean, I think we go off on government quite a bit because it's easy. It's an easy target. And no doubt government has a huge role to play in this. But at the same time, so does the private sector. We consistently lobby government for taxation breaks or for concessions or for cheap tariffs or for one issue or the other. It's time we started looking at things from a more competitive angle to be competitive on the world stage. Otherwise, we just keep running around in the same rut where the subsidies that the government has given to almost every industry in Pakistan has now run it into a fiscal deficit which is unsustainable. So, as we mentioned before, profit without purpose does not have meaning in Pakistan anymore. And it has to come down to stakeholder engagement and not just shareholder value.
Yes, excellent question, and I love the take Maheen took. And we have one more question to it, and I agree with Maheen. There's a lot of homework that goes behind an idea before it is tabled for financials and for rolling out. So that if that homework is not there, no matter how fantastic the idea is, it will stall. So yes, we need to be competitive and more industrious in our ideas. Yes, we have a question here.
Thank you, Maheen. This is Asad Ali Shah. Actually, you partly answered the question that I wanted to raise, and I think you covered it very well on regarding the, opening of the books and the lack of advisory with regard to, the projects. But I think you were referring to the infrastructure projects from the private sector which are already operating. What about the potential for the greenfield projects, new projects? There can be brilliant ideas in this environment. Do we have any, where I think the opening of the books will not be an issue? So in this current challenging environment, I think there could be a lot of opportunities for greenfield projects. So are you looking at it? How to raise financing, equity, and debt for infrastructure projects which are totally new?
So we actually have a 40% allocation on our balance sheet for just greenfield. So we are not going to shy away from looking at greenfield projects. And in fact, GuarantCo has demonstrated with the Shams transaction, which was the solar transaction they did recently, that was pure greenfield as well. So we do not shy away from taking on that additional risk. But what we will ask a greenfield project owner to do, as we would ask for any other project owner, is not, when I say open the books, I don't mean your accounting books, I mean your financial model. Your plan. Even for a greenfield project to come to life, there has to be a feasibility done, there has to be a financial model created, it has to make sense on paper before it will make sense in practice. So greenfield is open to us. We've demonstrated that in the past as well. I think in our pipeline today, we have about 3 or 4 greenfield already there. The onus is really on the project owner to make their case. And if that case is substantive, and if it can be structured, we will support it.
Great. Yes, any more questions? This, ladies and gentlemen, was the concluding session that we had, and I would like to request our very cherished Dr. Shamshad to please be presenting the token of appreciation to Akif Saeed here. Maheen and Aswar, if you could join in, please. Thank you, Dr. Shamshad. the token of appreciation, the beautifully illustrated a kind of a chronology of popular culture of Pakistan by Nadeem Farooq Baracha, a must-have. I'll request Maheen to present the token of appreciation to Dr. Shamshad, please. I'll request you all to please step forward for a group photograph. If Joe and Laith could join us. Thank you, everyone. Maheen, if I would request you to stay back on stage, please. Pakistan needs infrastructure and expertise for financing, and that is integral. With InfraZamin, both ends come together on the agenda. We hope that stakeholders today have concrete plans to equip Pakistan with the long-term development and consolidation. Infra for infrastructure and Zamin as the guarantor, they represent a great platform. We hope to see the local industry flourishing and an infrastructure that becomes a model copy by upcoming and established economies. We can do it. I will request the CEO InfraZamin, Maheen Rehman, to once again take the mic for the final vote of thanks.
Gee, so I think lots said and done here today. इस कॉन्फ्रेंस का मकसद ये था कि we talk about doing old things in new ways. Because let's face it, we're still building the basics here in Pakistan, and the gaps have already been identified, the issues have been talked about. As guarantors, and with GuarantCo and with PIDG support, there is a tremendous amount of firepower available on our balance sheet, on GuarantCo's balance sheet. GuarantCo is already committed support in guaranteeing frameworks with us, and they carry a $50 million transaction limit for Pakistan. We have PIDG that is looking at equity transactions in the range of $20 to $30 million here in Pakistan. We are looking at debt, and we're trying to do all of this in PKR terms, so in local currency terms, thereby taking the burden of the exchange rate off company balance sheets. This is a very powerful instrument to have in this market. And we're lucky that PIDG has chosen Pakistan as only the second country where they wish to implement their version of financing in. But InfraZamin, PIDG, GuarantCo, IFC, we can't do this alone. It needs private sector involvement. It needs companies to come forward with projects that can be supported. If it can be structured, if it can be sustainable, if it carries commercial viability, you have my undertaking, you have GuarantCo here, that we will do it. And we will bring those projects either to the bond market or to the bank market to close. We've demonstrated already with 6 transactions GuarantCo has done here in Pakistan, 1 transaction we've already completed here, and several more that we're looking at. So let this conference be the start of a discussion around more sustainable financing for Pakistan that is generated within the country rather than constantly sought from outside the country. I think when I look at the macros, this is probably the only country that I can imagine in this region where companies are cash rich, where provinces are cash rich, where investors are cash rich, but the federal government is bankrupt. And I think we really have to ask ourselves why and how did we manage to dig this hole? And it is only through more innovative solutions and relying on our own financial strength, which I assure you exists in huge capacity in the local market, that we'll be able to get ourselves beyond this constant issue of chasing the IMF. 45 years of IMF programs, and we are pretty much where we started from. So I think this is a great chance and opportunity for us to start thinking about doing things a little bit differently. I'd really like to thank the SCCP. The SCCP chair has been very supportive throughout Infrazamin's journey. The State Bank of Pakistan, that through their presence here demonstrated their own support for the innovative solutions that are presented here. I'd like to thank Dr. Shamshad for her leadership on both the Karandas side as well as the PSX side as well. I'd like to thank the PSX, Farooq, for also being here today, a very important player in the capital markets, and all our participants, because I think it is with your support that stories like this will go forward. It's not a quick solution, but it is certainly one which is viable and one that Pakistan should grab for the next 5 years and 10 years to move back onto more stable footing. Thank you all, and I hope that we have left with some optimism and some hope for the future. Thank you all very much.
Optimism, definitely. Positivity, definitely. And lunch out there, for sure. Just before you leave for lunch, kindly fill out the survey form if you haven't already, so that the teams can collect the total number. The survey forms are on your table, and there are pencils there in case you need a writing tool. Just fill out these forms, please, before you head out for lunch. We hope to see you soon, and yes, I agree, we need to have more of these summits. Don't forget our hashtags, Infrastructure Summit 2023 and Build for Impact, to be used for any social media sharing. Thank you.